Welcome, good afternoon. My name is Michael. I am the co-founder of Back to the Future Trading. Somewhere here is a pair of glasses. Oh, there you are. Good afternoon and welcome. It's a pleasure to see you guys here, and I can't wait to go through some of the signals that we're known for. We focus on time. It's time. It's time. It's time. It's about time. We look for signals that are based on times in the future, both direction and duration, knowing what direction to potentially enter, long or short, and then for how long. And so with those two things in mind, we're going to move forward today and get a sense of whether or not markets are in fact predictable. And I wanted to, before we go too deep, just remind everybody this is available for TradingView as well as NinjaTrader. And so do make sure that before I finish here today that we discuss these signals for TradingView as well as for NinjaTrader. And we're here today because I love this slide this week. This is a good slide for this week. How many of you believe that the markets to some extent are rigged? Rigged in the sense that when you sit down to trade, it feels like, Matt, there's somebody staring over your shoulder. And every time you think it's a good time to buy, the market drops. And every time you think it's a good time to sell, the market goes up. Well, okay, quite a few people. That's great. And so it's important to remember when you sit down that it doesn't matter how big your computer is, theirs is bigger. It doesn't matter how fast your internet connection is, theirs is faster. It doesn't matter who your friends are, they own every congressman and senator. They're in every administration. This is the wealthiest administration in the history of administrations, by the way. The largest concentration of wealth in a single administration. And it was pretty bad during the Bush administration. It was really bad during the Obama administration, especially troubling during the Biden administration. And now all bets are off. Almost all of the banking regulations that were in force after the 2009 recession have been directed to not be enforced. So the dogs are quite literally off the chain. And so today we're going to look a little bit into that deeper. And I'm just going to put another product here that didn't exist, and that's the TradingView version of this called Kronos. So we're looking at Tacheon Warp, but there's a TV variant for TradingView called Kronos too that we're going to be delving a little bit deeper into. And so part of what we do to prove to you guys that this works is create an internal memo. And you'll see here in a moment that each week my general manager, Rachel, comes in and she prepares these sort of indelible market forecasts that are available from 4 days ago. And so when we're looking at a chart like this, what is it exactly that the program is warning us about? And I thought this is a great way to kind of ease our way into that a little bit, if I might. Let's take a look at the E-mini S&P on a 1 minute time frame. E-mini S&P futures, we'll look at a 1 minute time frame, and we're just going to load 5 days of historical data. Now, most people, when they sit down to learn how to trade, they're loading all sorts of lagging information on top of it. They're looking at market profile and TPO charts and deltas, and they've got the silver bullet, the gold bullet, the bronze bullet, ICT, ABC, RESPECT, all these different setups, Bollinger Bands and Keltner channels and lions and tigers and bears, moving averages, non-lagging moving averages, exponential moving averages, VWAP. I'm going to have Alzheimer's someday. My wife's going to come in the room and the nurse is going to say, he's trying to tell you something. He can hear you. Honey, what is it? And I'm going to go, VWAP. And she'll have no idea what VWAP is. I'm still not sure. I do know. Don't write me an email. And so we take a different approach. We take a different approach. And let me show you a very basic way to analyze this market. If we assume that the game is rigged, we can ask a very powerful algorithm. In this case, our program has over 33,000 lines of code. And we can say, hey, go back and look at yesterday. You'll notice on my chart, I've put the number 1 here. Go back 24 hours ago. And I want you to look for me, computer, and tell me what times yesterday did the market go up and did the market go down? Does everyone understand that premise? What times yesterday, 24 hours ago, 1 day ago, did the market go up or down? And if there is a time where something significant happened, can you project that 24 hours into the future? Does everyone understand that? Anyone confused by that? We're going to look and see what happened yesterday, and if any of those times did anything impactful today. And so let's get rid of our fancy shenanigans and we'll just keep it simple. These are the times yesterday that the market went up and down, overlaid on top of today's price action. And if we look forward into the future, I can see the next 4 or 5 signals, right? So this morning, looking at what happened yesterday, we follow a trend trading system here that I'm going to teach you more about in a moment. But we would have been waiting for another short at 8:54. We could have been waiting for another short at 9:33, 10:12, and 10:37. Another short from 11:11 until 11:14. Then a long at 11:14, a long at 11:37, a long at 11:51, 12:08, and 12:32. All of these signals are based on what happened how long ago? 24 hours. There's a behavior pattern in the market that these guys are following and not sharing with you. There's a behavior pattern in the market that is encoded using clocks. Encoded using clocks. And so this afternoon, if we come in and we add the infamous histogram, time warp panel, we can see those times into the future. Jill, we can see them 24 hours into the future. So 1:03 tomorrow morning, we're expecting a move up based on what happened this past morning. 254, 319, 343, 401, we still have signals. 922, 945, 1003, 1013, 1044 Eastern tomorrow. And if you were following those times today that were 24 hours old, you were in some pretty good trades. We were just in a short right around this time at 344. So what's really cool is that we are able to prove to you that this is real. I'm going to come back now and load a month's worth of signals. And let's get rid of all those drawing tools. Does that make sense so far, everybody? There's a time code. There's a time code. And I'm going to look at the last 2 days. What was yesterday on the news front? Does anyone remember what yesterday was? What was the big news event yesterday? That's right. FOMC statement. That's a pretty random day. Pretty hard to predict what the market's going to do at all on FOMC day. And then what happened today? Unemployment. And then the big guy had a conference. Check it out. We had the forecasts for the E-mini S&P 5-minute chart 4 days ago. And these were the times that the program warned us for Wednesday might be hot spots, might be pushes up or down. And so if we look 8:40, 9:30, 10 o'clock, 8:40, 9:30, 10 o'clock, 7:10, 1:50, 3:20. What were the signals for yesterday like at the times where we were waiting for moves? Boy, oh boy, it sure looks like they had a plan, doesn't it? Up at 6:10. Remember, how old are these signals now, as far as you know? 4 days. The signal at 6:10 was known about 4 days in advance. You're in the UK, you're 5 hours ahead. This is 9 o'clock your time. And that signal was published internally and known about 4 days before that. Same as the 340 signal coming on the high end of the Asian session. So that's kind of neat. Now we start coming into the UK lunch section and the US pre-market at 7:10 New York time. And again, another 4-day-old signal. 8:40, we have what's called a fish hook. The market was falling, and Omar, look, 1, boom, 2, boom, 3, boom, 4 candles. It turns around and puts in a swing pivot low here. So we're going to call that one a reaction. There was a reaction at 8:40. It's a counter trend trade. We can't expect too much. And then 9:30 at the open, how far does that 5-minute candle drop down? From the close of that candle to the bottom of this candle is a near $450 move per contract. It really doesn't scale well because of the volume yesterday, but I want you to see how far down that move goes. What's the 10 o'clock signal supposed to do from the 4-day-old signal? Well, it opens at 56.42 and it goes to 56.55, 56, 14 points. Straight up. Hits the moving average. That signal was 4 days old. Get to 11:05, same thing. Candle opens, or the close right here, it drops how far? Straight away, 12 points. Would it be nice to get in an E-mini S&P trade and it goes $12 in your direction right away? Sure it would. What's the next signal after that? That we were waiting for 4 days. See where it says 1250 here? 1250 here. When was the chart published? 4 days ago. So we knew Sunday, Monday for Wednesday what they were potentially planning. And at 1250, we're getting even closer to the FOMC statement. And what happens? Does the trade go immediately against you or for you? Bing! Immediately for you. Bing! Immediately for you. And in the case of the 1250 signal, from the close of that candle to the high is another $13 move. You're getting in plus 12, plus 12, plus 12. Yeehaw. Now the 150 signal comes. When's the report? 2 o'clock. 150 signal. Look at this. Look at it. On the close of the 150 signal, right before the report. How far does it go against you? Doink. 4 ticks. How far does it go in our direction? 47. 47. But wait, where did that 150 signal come from? A 4-day-old chart, and this point 3 days old. So the market's going to fall until 3:20 and then go up into the evening. Okay. There's 3:20 and then go up into the evening. That's day one. That's day one. And that signal was the FOMC. So when people say, hey, how does it do around news? This is 10 minutes before they tear open that envelope. And the winner is the banks. I really thought I was going to win this time. I thought I had a shot. You never had a shot. And you can see for Wednesday's times, the algorithms were pre-programmed. The algorithms were pre-programmed to do this kind of stuff to you. When you were thinking about longs, they had pre-programmed a short. Now, what about this morning? President's talking. He's going to tariff Easter eggs, the ones with the chocolate inside. He's going to put 300% tariffs on the Cadbury egg and Mattel toys. That was another one. I think Trump hates toys because so far he said the kids, instead of having $30, they can have $2 that cost a few dollars more. And then he said he's going to put 100% tariffs more on Mattel toys. So I don't think he got toys when he was a kid. But these were the times for today. And when we overlap them on top of what happened today, boy, it sure seems like a lot more of the same old stuff, doesn't it? It sure feels like they had a plan. It sure feels like they had a plan. Any questions so far? Any questions so far? Okay. How might we trade this? Well, most of the traders that I've met that are using time signals are trend traders. And there are some signals that I teach that are mentioned. We go over them every week. Signal with trend, puncture, and then recently, the aggressive counter trend trades. What's a signal with trend? So starting with the London session, we have a 120 period moving average. This is just one way that we can trade with the timing signals. Is it the only way? Certainly not. Many of you have existing signals and systems, and you trade a completely different way. You overlay different tools on top. This is for somebody who's looking for a signal that they can build their first trading system from. And I just want to show you what's available if we constrain these signals with a basic setup. So number one, in the instructions on that page, I specifically say I'm going to use a 120 exponential moving average. It's a good moving average. We get some good reactions off of it, but it is not some mystical black magic guru inspired EMA. It just works. You can use whichever one you like. The second rule is we're going to have a stop. The stop is based on the average true range of the market at the time of the signal. And so in the tool, you can scroll down and see where I've put the number 1.5. 1.5 is telling me I'm going to put my stop the size of a 5-minute candle right now, plus half again away from the signal candle. So if the 5-minute bar is 100 ticks big, we're going to have a stop 150 ticks away. If it's 10 ticks big, we're going to have our stop 15 ticks away from the low or high of these candles. The dotted lines are stop loss levels. We're going to enter on the close of the candle. And now we're going to hold it. How long can we hold it for? Well, according to the forecasts that were available 4 days ago, the behavior pattern usually lasts until 650. Ding! So that's a $12.50 hypothetical move. The next signal is at 7:30. Hits the stop. Womp womp. We give back 4.5. There's a variation of the signal with trend called the crossover trade. If there's a sell signal and we eventually cross over the moving average, we can enter at the close of that candle. So in theory, we can enter at the close. Our stop goes above the crossover candle, and then we exit by the counter trend signal. That's a variation of the signal with trend. It crosses over the moving average plus 9. The next signal at 11:15 comes. The candle closes back above the moving average. Womp womp. We're out. Minus 16. Then you have the signal at 12:20 until 1 o'clock, $7. The signal from 1:20 to 1:25, $3.50. The signal from 1:50 until 2:50 is $2.25. This signal here hits the stop, minus 11. Beforehand, it goes $16 in your favor. And then the last signal of the day before the close, from 4 o'clock until 4:15, plus 5 ticks. Those are the signals with trend. Now, the puncture trades. There's a couple of them. At 9:50, a failed buy signal is the same as a sell signal. So my first short is right under that line. My stop is above the candle that drove through or punctured that line. That's my first stop out, minus 11. It comes through here again. I'm short, and then it comes all the way up, minus 20. Holy cannolis. Then it closes above the moving average and goes through the blue line, pulls back below the stop, minus 4. Then it goes back through the blue line up, plus 31. Now, before you freak out, you can trade these with micros. When the volatility is high, you can reduce your risk by 10. Those are the punctures. Now, last but not least, the aggressive counter trend. At 6:50, we have a sell signal. It's against the trend. I look left. There is structure here which is less than the full stop. I go short. It hits my stop. Womp womp. Minus 2. At 8:15, I look left, and the only structure is the signal candle to the left of me. I put my stop just above that candle high, which is less than the full big boy stop. I am now short from 8:15. If I was short from 8:15, I'm already in up here when the crossover candle happens. And now I can hold it until the next buy signal. So instead of a $9 winner, it's a $30 winner. The next aggressive counter trend trade is at 950. If I enter long at 950, my stop goes just below the low of the candle. It does move in my favor. How much does it move in my favor? It goes from here to here plus $10. But in the webinar, I don't have any kind of break-even rule. I'm going to count it as a stop out, -4. The next aggressive counter trend trade is at 1 o'clock. At 1 o'clock, I put my stop just to the left. I look left, there is structure here. It is not the big boy stop for trend, and I am short until 120. The next signal with trend is literally the close of the 125 candle. It never goes above the high and drops down into 150 plus 11. The next counter trend trade is at 250. My stop goes above the candle to the left of it. That's the local structure. I don't use the big boy stop. Let's see where we are by 3:15. I can log that one as a winner. Short, aggressive counter trend, stop just above local structure, exit +9. Those are all the setups today using the 4 methods that I teach every week, that I show in my live trading room. So if we add that up, it's a big number. It's a big number. Math is hard. But what I want you to see is there are more winners than losers. And I knew when the trades were coming. I knew what to do when I got there. 12, 20, 48, 59, 66, 76, 85, 85, 90, 92. Let's call it 90 on the high side. 80 minus 15 is 65, 45, 40. Let's call it $35 rounding up. Is about $1,500 per contract, or $150 for a micro. $150 for a micro. So obviously, coming in each session and having an understanding of when these moves are likely to occur, now that you know that I've shown you these in advance, we have a record of them existing before the move, we can go back and look at the day before that. Wow, they had a plan on Tuesday. Sure did. They had a plan on Monday. They had a plan last Friday. Signals with trend, aggressive counter trend trades, punctures. They had a plan last Thursday. And yet, after 16 years of doing this, people are still arguing. People are still trying to figure out how we made the tiger disappear. How am I manipulating your consciousness to make you believe that this is true? In return, in response, I'll say the same thing. These times were known in advance. The CEO of Screencast would swear on a Bible on his children's lives that those dots were Testing 1, 2, 3, 4. Am I back? 1, 2, 3, 4. Testing 1, 2, 3, 4. Sweet. So Jill, if you're using this on TradingView, or rather Megan, I was just saying how weird forex traders are, and they have trouble making friends because they're strange. And so they're usually off in the corner mumbling about the peso or the ruble or something else. So Megan, we'll take a look. This is the Euro US dollar analysis on TradingView. And you'll see, just like the warp signals, we can see the upcoming buying signals and telling selling times in the future. Can everybody see that chart okay? The text is a little hard to read sometimes. And so Megan's question was, let me find it here. Can you describe what it's like to go through life being so talented and handsome? Megan, I don't think that's a question for the webinar. I don't think we should answer that here today. The best amplitude is, man, I usually kill in these webinars. I'm not doing good today. I generally find somewhere between an 8 and 11, and there's a reason that 11 is the default. There's a reason that 11 is the default. In TradingView, there's a number that you can change, make it bigger or smaller. And so if we make the number bigger, the program is looking for larger moves in the past. So Megan, if I change it from 11 to 20, Kronos for TradingView is now looking in the historical data for these moves, but much larger moves. And then Megan, if I cut that number in half from 11 to like 6, it's going to be forced to look for even smaller moves. All right, so now it's looking for nooks and crannies instead of valleys that are larger in between signals. Does that make sense? So my general rule of thumb is start with a big number, go back to 20. And then Megan, you'll see what I refer to as orphan pivots. So you see how there's no signal here? You see how there's no signal here? Or there is a signal there? Hey, Phil, let me finish with this one thing. I'll get right to you. Did my wife send you, by the way? There's no signal here. Like Megan, you see how there's no times at the major moves? I call those orphan pivots. And so what you want to do to tune your chart, Megan, make that number progressively smaller. So go from a 20 to an 18 to a 19 to a 19 to an 18 to a 17 to a 15. I go like in 2 increments. And do you see as we get smaller and smaller, we're adding more times to the chart? But we still have orphan pivots at some of the big moves. It's an iterative process. And I have found that 11 gets us pretty close to most of those signals with the default value. Each pair, you'll only have to do this once. It's not something you need to adjust each week. It's not something you need to adjust every week. Right? Do you have questions about that? Tell me how you feel about that. And then I can answer Phil's question. Let me get this over here. Control C. Yeah, and so I would stick with 11. So if you go from the 1 hour to the 30-minute, we should have the same type of signals here. And again, you want signals at 2/3 or around 70%. The amplitude, or in the case for warp users, it's called the swing strength. And your value is 8 if you're a warp user. Should cover 2/3 of the available prominent swings on the time frame you're trading. Does that make sense? And you'll notice when you get a nice number on the pair, you really don't have to monkey with it much. So it should work on the 4-hour chart, and see how it still looks pretty good. So Jill, Megan, if you get a large gap, between the signals, then you can deploy the splits. Do you know what I mean when I say by splits? Every time sequence is a wave, meaning 1 o'clock to 9 o'clock is a wave. And part of wave theory, it's a time fib, yeah. So you can come in here if the gaps are too large, and this is really good for you, and split that gap into thirds. And you see how that lines up, and I didn't know that until we just drew it, right? It just works. So you can use physics to come in and find the turns in between. Sure. So when you have a split, remember that there are two things. Harmonics diagram. When we're working with time signals, Jill, we're looking at the whole wave. So if the whole wave is negative on this side and positive on this side, we have to maintain the law of oscillation. So it's got to be negative, positive, negative, positive, negative, positive. So if it's negative here and we draw the splits in the middle, this has to be positive and this has to be negative across that gap to maintain the law of oscillation in time. So if you're drawing a split inside of a split, which is totally copacetic, I always remember what my first line is, and for me, my first line is always red. So if I click and let go of the red signal, I know the next line in between is green. If I click and let go of the red line, I know that I'm in the right sequence. So I always know that my split is set to red on the primary line. And so I'm drawing from red to green, and from red to green, and from red to green. Right? So that's how you do it. That's how you do it. Questions? Even on TradingView, we can see the times coming up and know when to look for the moves. So Phil, yeah, sure you can. You can do thirds in NinjaTrader. So if we come here, so Phil, do you recognize that I had signals that were 4 days old, that I had trading setups that were 16 years old, and when I waited 4 days in the future and applied the 16-year-old settings to the setups, that we have $35 or $1,500 in profit with known risk reward ratios? Now, which is harder to do? Me to show you this and me to show you that, or me to show you this? Which one was harder and more meaningful? Everybody who works here has an Apex certificate. It's a requisite. But what I want you to recognize is that this was the harder thing. So John, when you do splits, I use a time extension tool. And again, I draw from negative to positive. You see that? I draw from negative to positive because I always know that first line is red. So negative to positive. And I alter the value of my Fibonacci time extension tool. So when I get my Fibonacci time extension tool in Ninja, I come in and I edit the price levels. So 0 and 100 are some neutral gray color. 33.33 is green. 66.66 is red. And then I draw from negative to positive, right? So Phil, you didn't answer my question. I answered yours. Which is harder to do? Take signals from 4 days ago, apply a trading system to them, and walk away with $1,500 theoretically, or show you a screenshot of a certificate. Which one should be more meaningful to you? Of course it's this. Of course it's this. But I get why you ask. It's cool, bro. It's cool. Here was the E-mini NASDAQ. This is what most people in the Apex environment trade. No, it's cool. I'm getting a thicker skin and realizing, Phil, I'm kind of an a-hole. I have a really thin skin. And even after 16 years, I don't like it when people question my integrity, but I got to get over it. I want you to be successful. I want you to recognize that most people can Photoshop an Apex picture. There's one that'll blow your mind. Most people showing you Apex things usually have a really good Photoshop department. So here's the last thing I want to show you. And you shouldn't believe me when I tell you that it's a real certificate. But I do want you to see that this was 4 days ago. And I won't go through all the signals. I'll just enlarge it so you can see them here and pause it later. And then Phil, when I come back and look at what actually happened today at those times, that's what we had. So on the NQ today from the open, follow the signals I just taught you, right? Short until here, plus 54. Short until here, plus 3 ticks. Short until here, plus 48. Short until here, plus 87. Short crosses the moving average, get out, minus 6. Long from here to here, plus 55. Long from here to here, minus 17. Long from here to here, plus 26. This was today. This was today. And these signals are 4 days old. These signals are 4 days old. So Phil, when you wake up tomorrow and you sit down and trade and you don't have these times, you're willingly not using this resource. You're acknowledging that you would prefer to not know. I don't want to open the box and look in. I'd rather cut a hole in the side and feel around in the dark with my fingers. That's what 75% of people who see what you've just saw are doing. Okay, now let's add the punctures into it. Ready? Candle closes above the moving average. We exit our short. Fill as soon as it goes through that blue line, I enter long. My stop goes below the puncture candle. I exit at 11.33. I add $67 more to it. I punctured the blue line at 11.41 stop loss. I exit at the next white signal, second puncture, plus $19. Let's do the aggressive counter trend trades, shall we? Here's the signal, stop below recent structure, stopped out. Here's the signal, stop below structure. Here's the signal, stop below structure. Here's the signal, stop below structure. Let's add it up. Aggressive counter trend, taught it last week, taught it this week, taught it the week before. Long, immediately exit, minus 12. Long, on the close of this candle, exit at the next signal, plus $4. Long at 10.13, exit by 10.39, aggressive counter trend, plus 41. Long at 10.56, up, 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 out at 11.17, plus 97. Short at 11.41, immediate stop out, minus 11. Short at 11.50, small stop, minus 1.5. 12.10 after lunch, we're done. $54, $41, $48, $4, $87, $19, $97, $55, $67, $26 plus, minus 17, minus 6, minus 1, minus 11, minus 12. So Phil, again, what are we trying to prove here? The times were how old? 4 days old. They're really 7 days old, but to you in this example, they're 4 days old. We had the rules for the trading system here. We got there 4 days later. When we got to the times, the only filter on our chart, the only thing that's telling us what to do is a 120 EMA. And some of you can't get out of your own way. Some of you, despite having this tool, still wake up and trade like lunatics. Some of you can't accept what the signals represent. Something is happening over and over and over and over again. And this signal is only here because the market is rigged. And you want to be right. And you want to use your intelligence. You want to leverage all those books you bought at the trading convention. You want to use the thing you paid 20 grand for because you were in a low point in your life and the guy had a British accent and sounded smart. It really is this simple. It really is this simple. So, this isn't the only example of how predictive markets are. There's other stuff that no one tells you about. There are other things that are weirder than this. There are stuff that I could show you that'll make your hair stand up. Look at this chart. Look at this chart here. This is Bitcoin on a daily time frame. Here are more things they don't teach you about because they don't want you to know and they don't want you to be independent from them and they want you to use these crap indicators and use these gurus. Let's put a 200 period moving average on here. Right? That's what everybody usually watches. Good old American 200 on the daily Bitcoin chart. And now remember all the signals that I taught you, Megan. Signal with trend, punctures, aggressive counter trends. You know what these signals on Bitcoin are based on? How close the moon is to the earth. How close the moon is to the earth. Everywhere you see a red dot is an apogee. And you can go offline and look at those definitions later. Everywhere you see a green dot is a perigee. Moon is as close to the earth as it can be. And I warned everybody here last time. I said, your next push up in Bitcoin, and I gave the date. And I told you how long you had. And I know when the next signal is coming. And I know when the signal after that is coming. This is even weirder than the first thing, but it exemplifies that markets are predictable. Markets are predictable. Thomas, there's a puncture of the apogee signal. What? What if you go long with trend at a perigee and you exit at an apogee? That's a $19,000 move in Bitcoin. What if you enter at a perigee and exit at an apogee? Well, that's a $9,700 move. What if you enter at a perigee and exit at an apogee? That was a $6,700 move. What if you enter at an apogee and exit, at a perigee and exit at an apogee, you lose $3,800. Then the next signal here hits the stop, you lose 10. Enter, exit, you only made 652. Enter, exit, you made 11,000. So there are alternate ways to predict when markets will move. In fact, the guy who first stumbled on this was laughed at. His name was William Delbert Gann, and they weren't making fun of his name, although they probably did. And when they interviewed him back in 1909, look at what they said. Gann developed a new way to trade. He bases his trades upon natural laws. Well, surely he was accepted by everyone. I write this article fully recognizing that most people won't use what he's teaching because he requires them to think. And most traders hate thinking. Here we are, 130 years later, still working. And it's not just lately, it's been happening for a while. So what are we left to do? What are we left to do over here? We're left to accept our fate. If we're trading oil futures, we can see the times coming up on the right-hand side of the chart. And we can wait for banks. We can wait for banks to make their move. Are there any advantages to the TradingView version versus NinjaTrader? NinjaTrader is actually preferred for a few reasons. Let's do a side-by-side comparison. Most people are either in Camp A or Camp B, Wayne, and I'll explain the subtleties between the two. Where's our chart? There's our chart. Whoops. So in TradingView, we are limited by the platform to 7 days historical data, right? In NinjaTrader, we have, I think they'll give you 1 year plus of 1 minute data. And so in NinjaTrader, I can choose multiple lookbacks. So I can study a 1 day look back, I can study a 714 look back like I described earlier in the webinar. There are some markets that work well with a 3-day cycle. And so I have the flexibility inside of here, Wayne, to come in and change where I look for the patterns. The default values are pretty good for most everything. Inside of TradingView, I'm limited and it's fixed to a 1, 2, 3, 0, but I can alter the amplitude. I do have the ability to change that. NinjaTrader and TradingView both allow us to look at open price lines. So I can activate a parameter in NinjaTrader and say, hey, I'd like to see the timing, support, and resistance levels. And so now these solid lines, Wayne, are support and resistance levels that I can use for pullbacks and extensions. And here's where we start to diverge. In NinjaTrader, I have the ability to extend those lines forward into the future. So if I want, for example, I can tell it, extend those lines 10 signals forward into the future and get support and resistance levels. In TradingView, I can't. Not because I don't want to, because TradingView's final limitation is there is a fixed number of characters in their PineScript editor that are available. We are 2 characters short of the max. So we've programmed as much into TradingView as we can before we're forced to stop. NinjaTrader, we're currently at 33,000 lines of code plus. So we can do more. Like what? Like, for instance, I can activate something called the trend identifier, which identifies trend based on time signals, and eliminate my moving average. And now the software is telling me to only look for shorts. And I can go back and see that there's no moving average on my chart, just a trend identifier that's telling me, hey, take shorts from here, take longs from here. That's one thing I can do. Let's go back to the ES. The other thing that I can do in NinjaTrader is I can use something called a chop identifier. Inside of NinjaTrader now, I can tell the computer when there are candles that are so many bars apart from each other, like right here, Wayne, there are 5 bars or fewer between 8:15 and 8:30, see? That will tell me that this is a consolidation zone because the candles are close. And I should avoid trading in between those because chop is likely to occur. And then what I'm able to do is look for an entry into the zone after the breakout. So in NinjaTrader, if it consolidates, I'm measuring how far the market moved between 357 and 412 because there are 5 candles or fewer. And whichever zone it enters into first is the zone I'm going to trade down into the bottom for a short or up into the top, breaking out of this consolidation zone. And in here, Wayne, I can see there are 2 signals that are close together. So Wayne, does that make sense? I can't show the Firefly stuff in here. I'm going to send more out on the emails about that this weekend. So there's some things that NinjaTrader can do that we just can't do with TradingView yet. There's also NinjaTrader, these abilities, it's kind of applicable to a trader who's got some experience. And one of the advantages of limiting everything on TradingView, right? We kind of look at it from the other side, is many of the traders on the TradingView side are new. They're not sophisticated in the sense that they know what these different signals are doing or what they mean. They just want to kind of know, where do I look for longs and where do I look for shorts? And so there's an advantage on this chart now to just basically say, look, type in the instrument, leave the amplitude where it is. Here's Bitcoin on a 4-hour chart. Go. NTA, it's pretty fast. I think it's your machine. And one of the things you can do, Bala, is you can clean your cache. In NinjaTrader, you can also add RAM, which is pretty inexpensive lately, especially now, practically giving it away. Yeah, so Wayne, I don't see TradingView as a hindrance. In fact, in my live room, we use it every day exclusively. Today we traded the NQ on a 1-minute chart with the signals. And Wayne, do those signals look any less accurate than the warp stuff we've been using today? It's still in that 60% window, right? The accuracy of the signals, and Thomas says it's prettier than NinjaTrader. It is pretty. It is definitely prettier. I'll give you that. And so, yeah, I would argue, Wayne, that you're not sacrificing anything. And in the beginning, you sort of want to limit your choices and you want to get straight to the data and the entries. Short at 944, short at 1011, short at 1025, short at 1045, short at 1105, stopped out, long at 1112, long at 1137, long at 1152. I would argue it's an advantage for you not to have too many. You don't want to be the guy. How many of you guys have seen those videos where there's a call to air traffic control and it's like, is anyone there? This is Tower Control Houston. Who's this? Yeah, this is Barney. My friend had a heart attack and I don't know how to fly a plane. And then the air traffic controller will say, can you see the horizon altitude altimeter on the dashboard? And the guy goes, hey, listen, did you not hear me the first time? I don't know how to fly a plane. So when you're using TradingView, there's very few things that you can change. And I think that gets you faster to the information. What will happen over time is you'll start to see some things and you'll say, hey, I've noticed when this happens, X, Y, Z, and say 6 months to a year from now, you can grow into the other platform or use them side by side like a lot of customers do. You have options, but it's a bad option to not use either of them now that you know what it does, right? It's a bad option not to use either of them. Yeah, I saw the Mark Wahlberg movie. They said it was called Flight Risk. That was the one where Wahlberg said, make me not look handsome. And they put him in one of those skull caps with weird middle-aged man hair. It's like, dude, just shave your head or do whatever. Don't put the weird thing on like Sofia Vergara did with the big nose. And she's a cocaine mob boss all of a sudden. You got to give me a big nose so no one knows it's me. Everybody knows it's you. It's you with a big nose. Cut it out. The role was so liberating for me because nobody knew it was me. Everybody knew it was you. Shut up. It's the only reason we watched that stupid movie. Yeah. So yeah, Wayne, you're going to be okay. You're going to be okay. And it's just neat to be able to move from instrument to instrument. And whether you're looking at crypto, you're looking at currency pairs, right? Most of you aren't looking at a 1-minute chart. you can get a pretty big sense pretty quickly of what the behavior patterns are in the markets you're trading and see what they have stored in store for tomorrow. Yeah, Chris, the recordings are always published to our YouTube channel. Rachel usually has them loaded up on Friday. And so if you go to YouTube, you can visit us at Back to the Future Trading. And then every one of the webinars, Chris, is recorded and uploaded to our YouTube channel. So don't forget to like and hit that notification bell, and it'll let you know every time we upload a new class. And keep those of you that don't know, make sure you're getting in here, because then you'll get access to the shorts that I'm providing each day on social. We have Instagram, Facebook, YouTube, TikTok, and yeah, that's a great way to go back and review what was taught here today. Any questions about this before we go over how to get it for yourself? Any questions about this? Can I look at gold from 5 minutes today? Sure. Yeah. Let's come over and take a look at gold futures. Here you go, Phil. More of the same. More of the same stuff. Let's see how far back we had those signals published to validate their veracity or credibility. Rachel had them from 155, 220. And so Phil, you see 155, 220. So all of the times here were known since 4 days ago. It's pretty bananas, right, man? Yeah. And so how many of you are old enough to remember this movie? We'll end it right here, and then I'll show you how to get started. Let's do it even better. Let's do this. Can you make me a photograph, photo realistic, of the Wizard of Oz behind a curtain watching stock charts on 50 computer screens with his back to the observers outside? Classic candlestick, dark and dramatic. Whoops. This is what I think the markets really are. And in years past, they tried to hide it from us. They tried to make this an illusion, right? There was always the illusion of randomness and markets kind of floating around. And I think one person blew the cover for everybody. Who remembers the senator who seemed to have the golden touch for stock trades that made tens of millions of dollars? What was her name? You all know who it is. It was Pelosi. Pelosi broke the fourth wall. And she said, I don't even care. I don't even care. And then most recently, who did it on the right? Do you remember the article? Watch this. Market manipulation tariff day. Somebody had tens of millions of dollars in 0-day options moments before the tariff announcement. It was a bet that prices would go straight up really far by the end of the day. And then you got this one, Marjorie Taylor Greene, stock trade tariffs. No, they don't want us to see it. Bought thousands of dollars in stock right before the tariff pause sent markets soaring. They're not even trying anymore. They're not even trying because it's this guy. It's the wizard behind the curtain. And he's pulling all the buttons and he's pushing all the levers. And of course it did this 2 days later, Phil. Philip wasn't lying to you. He was telling the truth. There's no way for us to fake this. What'll make you sick is when you go back and look at days and days and days worth of gold signals. When you look at what happened yesterday at the signals I gave everyone, it'll make you sick. And then the day before. And then on FOMC day. You can wait for these times where the risk is so small that it's nothing if your stop is hit and say, nah, I don't want that one. Nah, the risk is too big at this time. And then you're sitting there and you're like, you know what? The risk on this trade is just under the candle. Let me try it. You're sitting there pretending to watch the movie your wife picked and gold moves $960 in your direction. What? Or you short it in the middle of the night and it goes $1,800 in your direction. That's what'll make you sick. And if you look at gold on a daily chart, it's even worse. It's even worse. We've been publishing these daily times now for a year. You want to know when gold is going up next? May 15th, June 4th, July 7th. After that, August 18th. That'll make you sick. But here's the cool part. You have a way to counterfeit your own invitation to the ball. We have a Chia Pet just add water Cinderella carriage. Bloop. We have our own cyber hacking module that looks at their data in a way they don't think anyone's going to look. And for the most part, they're right. Remember, 75% of people who see what Phil is seeing, who see what Wayne is seeing, go, I don't want to do it that way. I don't want to know, because then how can I be excited and blame things? So it's a difficult point for a lot of people, because this is a moment where most people are going, so wait, are you telling me all the other stuff I bought, all the other education wasn't what I thought it was? Not all of it, most of it. Most of it was a pacifier that you've been sucking on all these years, trying to figure out what the hell is really going on out there. And now you have a chance. Now you have a chance to have it for yourself. On our website, new options for you knuckleheads today. Check it out. We're going to go to Trading Tools. And if you start with the Kronos version, in the past, we would make you pay for a lifetime license of this. But then the world's on fire and India and Pakistan aren't playing nice anymore. And if you try to buy an avocado at Costco, it costs $45,000. And so no guacamole for us for a while. We readjusted everything to a pay-to-play environment. And so if you want, we have a Kronos subscription. It's $2.95 a month, 30 days. You're going to see 30 days of this stuff, and it's going to change your life. You're going to say things to your wife or husband so excited, and they're going to say, I don't know what you mean. You keep saying Kronos like I know what that is. $2.95 is there. If you want a lifetime license, there's an option for it. I want to buy it and have it forever, take it to bed and call it George, right here. You want to save a little money and go in for a year, you're going to save a few months of subscription prices and tell Bob at work that you are thrifty. If you want to add my live trading room, I have a room where I show Warp as well as Kronos. We look for setups. I show these signals live. We have books that describe the setups. Absolutely, it's $200 a month more. You can go that route as well. Okay, $2.95 a month for Kronos. I'm going to paste that link into your GoToWebinar chat box. Here it comes, 1, 2, 3. It's in there. Now, what about us? We like Warp. Warp, we're going to look at the first page on our trading tools page. Click on the link. Same thing. What? Yes. You have a low price on-ramp now. Pay as you earn, $4.95. I'll put that link into here. Same thing if you want the live trading room, that option is there as well to add to it. We want to help you get started and not commit to everything. So 12 payments of $4.95 is $5,000, $6,000. There's an annual subscription of half of that. So I've deeply incentivized the annual subscription. You want to own Warp forever, it's $59.95. So $4.95 a month, 10 months, that's $5,000, 12 months, that's $6,000. You can get the annual subscription for $29.95. And then 1 day of trading today on Thursday was theoretically $1,500 if you followed all those basic setups. So those are the two options that you have available to you. If you go to Trustpilot, we did have a 4.8. We've been knocked down. We've been knocked down by Venkat. Venkat wishes he could give us 0 stars. Venkat does not own the program. He's never had it on his computer. He's never given us $1. Venkat was mad that we didn't give him a 3-day free trial. And he was mad that I told him he probably didn't have $300 and he should not trade if he was underfunded. He said it was abuse. And so you'll see my comedic response underneath. I kind of like when we get 1-star reviews from crazy people. If you're a customer and you're having a good time with the program and you think, even if you're not, here's the link. But if you want to help us out and get us back up to the 4.8, kind of need you. Calling all customers. Even if you've left an earlier review, if you've had a recent experience you want to share, the more people who come in and share those, we do get 1-star reviews. But you'll notice it's either almost all 5 or a 1. And this is a good chance for you to read through the experiences of people who are actually using the software. Anywhere you see green is someone who's actually purchased the program and they're using it. So good opportunity if you want to learn a little bit more about us. But at the end of all of this, we have those to support you. We have our 16-year track record as a company. We have the signals that we've generated 4 days before the webinar, along with the signals that we're teaching you. And you can see the after effects of those movements to prove once and for all, hopefully, that there's a plan. And tomorrow, we already know the times. Here are the times for tomorrow on gold's 5-minute chart in Eastern time already. And I'm just going to sit here and wait like an appointment. I'll look for longs, I'll look for shorts, aggressive counter trends and punctures. No fancy lagging indicators. When the trade's over, I can leave. I can walk away from my computer and be a human for a minute instead of sitting there watching every tick or listening to a 17-year-old on YouTube tell me how to trade. Tell me how he got his Ferrari trading the ICT silver bullet method in 3 easy steps. If you just download this ebook, the world will open up to you. Sure. All right, guys, that's the end of it. And I want to thank you for your time. I appreciate all of you. And just apologies for being kind of a jerk sometimes. I believe in this. I've seen what it can do for people. I've seen how it's changed their trading careers. I'm an engineer. I know how to build stuff. I build good stuff. I've been building good stuff together with my partner, Ron. He's an engineer and a fabricator. The two of us together are sort of the Steve Jobs, Steve Wozniak of trading tools. Stuff just works. We've built a really great community. And when you're a customer with us, by the way, we do have a Discord where you can interact and mingle with all the other customers and the people here at the top. We're all in the same hotel room together, sharing what we know, posting our lessons inside of here with each other. And if you want that kind of a community too, we now have a Discord available for you. And that's a perk of being a customer as well. If that's important to you, we've got it. I love you. I appreciate you. I want you, if you want to know a link to the Discord, just email Rachel at backtothefuturetrading.com. Edge this year, Thomas, is a virtual event. More emails coming out this weekend with screenshots of the actual programs, including Retrograde, as well as Firefly, and the all-new Guardian, which I think is going to transform the entire industry. Got a good feeling about it. So stay tuned for that. Remember, the market you trade is not random. You can be equipped with the most powerful tools available, but it's more about the community. It's more about the proof. Knowing that you can know these times in the future leaves you with a difficult question. Most of you will lose the cost of the lifetime license of the software before you realize what you had today. Most of you will say it's too expensive, and tomorrow you'll lose $5,000, $6,000, $7,000. You'll blow out 3, 4, 5, 6, 7 Apex Bullinox earn to trade accounts. It's expensive when I show you the solution, but it's not expensive when you lose those dollars. And it doesn't have to be that way. You can change. You can change. This is what we believe. If we know when the enemy is going to do something, we do it when they do it. If we know when Goldman Sachs is going to manipulate gold futures, if we know when JP Morgan is going to spoof the futures markets reasonably, if we have some sense of that edge, if it's 60% or 65%, we measure the risk, we accept responsibility for it, we try to double our money. We know how long the trade has to move. We don't get out early, we keep our stops where they belong. We wait for the next signal and get away from the computer in between. That's what I can offer. Venkat didn't want that. He wanted a free trial. We don't do free trials. We're looking for people who are ready, who are serious, who understand what they're looking at right now. And if that's you, welcome home. May the wind be at your back. May the sun shine upon your beautiful and handsome, glorious, wrinkled, smooth skin, furry, whatever you got going on faces today. May the valleys rise up to meet you and the mountains lay low before you. I wish you peace today. The currency of our generation is anger, discord, and division. It is an agnostic tool in use by everyone. Everyone wants you to be angry. Everyone wants you to click this, click that. Everyone wants you upset. I remember I was a kid and I got on a bike and I was happy. And I walked into the woods and I skipped rocks on a stream. I played kickball. It was different. I remember when it was different. Even during high inflation, Jimmy Carter, gas prices, gas lines, I remember people were polite and nice to each other. Nicer. I wish us all peace today. Peace and prosperity for the things that you want, for the trades that you're trading for, travels, philanthropy, helping with bills, whatever it is. I believe that you can do it. I've seen people do it. I've watched them turn the corner. It's not based on intelligence or financial resources or genetics or anything. It's determination, it's will. And if you're here listening to me, you've got it. You're one moment, one step, one day, one trade closer to putting it all together and clicking and having what you want. And I'm proud of you for pushing forward today. Continue to drive forward, whether it's me or somebody else. Keep going. Don't stop. You can do this. I know that you can do it. I believe in you. Have a great night, everybody. Chris, check out for the webinar. This will be uploaded on our YouTube channel probably tomorrow morning, definitely before lunchtime. Don't forget to like and subscribe. Comment in there and let me know what kinds of things you want to see in the next webinar. And until then, remember, the market you trade is not random. Tomorrow when the bell goes ding, ding, you could have known, and some of you chose not to. Please be careful and remember, trading's not for everyone. If you're not looking at this seriously, you might be gambling, and that's okay. Just recognize it and walk away, because I've seen people lose everything, and you don't have to. Just stop, take a break. It's okay. See you guys later. I love you all. Talk to you next week. Have a good one. Bye-bye.